All right, start the recording. Let me know if everyone can hear me in the live stream or if I am gone again. Yes, perfect, perfect, perfect. All right, nice. Perfect. So, where were we? Well, let's start all over again. Again, this breakdown is going to be mainly focusing on fair value gaps. I think you already know that by now. But what I was telling here on the dollar, and if we go over the dollar first, then we came into the overlapping part sitting right there. This overlapping high right there with a fair value gap. After that, on the 4-hour, it becomes very interesting because the 4-hour gives us a greater indication of what price potentially wants to do above this premium array right there. Now, what I was going over is the third candle is extremely important here. The third candle seems like it is currently respecting this premium array right there, which is again a swing high. It is important to understand here, my thought process is not that once I see that third candle, I definitely think we are going lower. There's just some suspicion. Why is that? Because if we look at the argument here, for example, when we take out this high right here and we look at the daily time frame actually, can you see the difference between taking out this high right there and forming that fair value gap perfectly overlapping with this exact high? That indicates to me clearly that there's no chance that we are sweeping that high because we're clearly closing above it. We're very comfortable above that high. Then we create a fair value gap exactly overlapping with that high as well. There is no confusion there on any bearish arguments that might be there. No. If we are going higher, then the overlapping high right there is definitely something that we'll at least get a rejection from. Where here on the 4-hour, once we take this high, this is sort of the second tier, as in this is not that high probability anymore. When we take a high and you see the third candle that should create a fair value gap, immediately retrace back towards the high, which prevents the high from being overlapping with a fair value gap right there. That is not a great sign. That is not high probability anymore. Again, what I was going to say is that at first, when we see any fair value gap, we expect momentum, like we discussed in the previous two sessions. And when we talk about momentum, we expect this fair value gap right there, of course, in first instance to hold right there. When that doesn't happen, let me see. All right, so when we see this fair value gap being created after taking it high, the first thought process should be always momentum, as in we are going to continue higher off of that. But there's a difference between this momentum fair value gap right there and the daily fair value gap we were talking about right here, right? Because in this 4-hour fair value gap, there's already some suspicion that we might create a sharp turn. There's nothing guaranteed just yet. There's nothing to show that it will actually create it, but there's some suspicion for it. So after that candle, when we see this candle right there, there's again another argument that we might continue lower right there, where all we're doing is we are fixating one bias. So here we have a bullish bias, and afterwards we get all the signs for bearishness in the market, which is not something we would want to see, of course, if we want to still continue higher. Where eventually, what do? We create an ST, a sharp turn after sweeping a premium array, which on the daily time frame simply becomes a sweep right there in the form of that wick. So at this moment in time, on the daily, we can also see that if we do not want to create a daily value gap higher, we should mark out that high of the first candle right there. Why? Because that will tell us if we indeed want to trade towards this low right there. Now, this is crucial. And if we can understand this, then you're ahead of a lot of traders. And the reason why is because a lot of traders here don't look at the daily time frame, still look at the 4-hour, ignore all the sweeps that we had right there, and will still look at this breaker and think, wow, that is a beautiful breaker. And I think that is going to hold. And don't get me wrong, from my experience, I also did that. And from my experience throughout the years is that that's not what you want to do. That breaker is indeed, by the looks of it here, it's a great breaker. But understanding the whole story that we have right there, failing to create that daily value gap higher, then having a sweep after that premium array right there, we do not want to have longs in this leg. So even though this is a great order flow lag, this is not where you want to look for longs. It's actually where you want to look for shorts instead. So that is quite important to understand, and that is also something that comes, of course, with practice. And the easiest way to avoid longing anything in here is, of course, understanding as well that the highest probability price action happened here, right here. After reaching that high, that is when the low probability conditions start to kick in again. After reaching any target, that's when potential low probability conditions start to kick in again, especially when we then create the story right there of the dollar sweep. And that is when we look to target this low right there. Now, after targeting this low, we again have a beautiful lag lower. So the first thought process is, again, always momentum before we have manipulation. We sort of always see the good in things, right? We always first talk about momentum before manipulation. So here we expect momentum again, potentially continue lower. But we have the same signs again. We have again that third candle being suspicious. Why is this third candle again suspicious? Well, this third candle is sweeping and respecting again a discount array, where the third candle on the bullish fair value gap right there, this third candle, was respecting a premium array. The third candle here is respecting a discount array. How do we know that? Look at this wick right there. That wick is simply said a sharp turn on the lower time frame. Why? Well, can you see this sharp turn that we had right there that we were talking about? What was that on the daily time frame? It was a long wick right there. Wicks on the lower time frame, and that's why candle signs, when we are respecting, is just a sharp turn on the lower time frame. So here on the 4 hour, this is a sharp turn on 15 minute, etc. We don't necessarily need to go into the 15 minute to then confirm if there actually is a sharp turn. No, we just look at that wick and we know the story behind it, and we say, all right, it is respecting that discount rate currently. That is the most important part. So when it's respecting that discount rate, it is also coming into this fair value gap with a lot of momentum, right? With a lot of momentum. So is that something where, again, we talk about that train, right? Do you want to stop that train? Do you want to stop that train of momentum? No, not necessarily. You would want your third candle to be very easily tradable. For example, the third candles right here, before we came into the overlapping part, these candles were all consolidation candles. Consolidation candles meaning that the last momentum we had was bullish. There was no real bearish momentum. Yes, you could argue we also had some long wicks right there. Overall, we just had clearly consolidation candles. All right, so we only still have bullish momentum. The bullish momentum, and the way I see this is we have bullish and bearish momentum right here. Then the consolidation is in the middle, where there is no bullish momentum, there is no bearish momentum. So to pick up the bullish momentum again is a lot easier than to go from bearish momentum all of a sudden back to bullish momentum. That is likely not going to happen. And what you'll see in those times when we all of a sudden need to switch from bullish to bearish, that is when we disrespect it right there, get a rejection first, we mess around 50-50, and then we get the real price action again. So to show you what that looks like as well right here is, again, you have this 4 hour value gap right there. That is where we have a lot of momentum going into that 4 hour value gap. Not necessarily where you want to look for shorts. Why not? It's the same premise that we are sweeping this low potentially right there. So first instance is momentum. But if we do not have the good signs of momentum, meaning when we take a low, we should ideally have a fair value gap exactly overlapping with the low right there, which on both instances we do not have. So right here, we wait, we create again a sharp turn. So do we target higher, and can we target this high? Yes, definitely we can. The only thing here that becomes very important to understand is that you are currently trading in seek and destroy conditions. When you trade in seek and destroy conditions, well, let's first actually go over what seek and destroy conditions is really quick. Seek and destroy conditions is where we are not respecting fair value gaps, very simply said. Meaning fair value gaps are not following through. We are not coming into fair value gaps and creating new fair value gaps off of that. This fair value gap higher right there got disrespected right there. These fair value gaps. Afterwards, the fair value gaps lower right there got disrespected as well. When you have both sides of fair value gaps getting disrespected, because if price is not bullish, it should be bearish, right? So the bearish fair value gaps should follow through. If price is not bearish, it should be bullish, right? So bullish fair value gaps should follow through. If it's neither of those, then we are seek and destroy conditions. And simply said, seek and destroy is when price is just consolidating. And when we are consolidating, fair value gaps are less reliant. Yes, the fair value gaps are reliant, as in they tell us exactly when we are consolidating. So that's great. But to trade off of fair value gaps inside consolidations is a little bit more tricky. You can do that if you get the right signs. The only thing is you need to lower your expectations. You need to demand more of price action and your target. That is the most important part. Your target needs to be very, very reasonable. Because when we create a fair value gap here, then it simply becomes the loyalty test. And with the loyalty test, I mean, are you going to trust fair value gaps constantly after they clearly showed you that they are not willing to hold? So why on earth would I trust this fair value gap right now? What is the differentiator between this fair value gap and all those fair value gaps? Well, we held that previous fair value gap actually, which is a good sign. But still, we are overall still inside the bigger seek and destroy conditions. We are inside the consolidation. So here, if I want to trade off of this fair value gap right there, I do not demand this fair value gap to push all the way higher right there and expect all new all-time highs. Very unreasonable, very illogical you could say as well, because why would you trust this fair value gap after price already showed you that we have not been holding fair value gaps, we have not been respecting fair value gaps? So trade the rejection, but do not expect price to follow through all the way. So your target should be in alignment with that as well. With afterwards, of course, we reach the context high. And after we reach the context high, what do we see again? We also see that we failed to create a new fair value gap right there, which then becomes very interesting, because when we fail to create that new fair value gap higher, the next target is this low, of course, which is quite obvious. Next target is the order block that we have right there. If we disrespect that order block, what do we see? Then eventually the target becomes that low right there. Now here we have another fair value gap. So the target becomes quite clear, right? And that fair value gap should now continue lower overall, right? Because that is clearly what the fair value gap is telling us. Yes, correct. But we need to remember we are in seek and destroy conditions right here. And that is the most important part about the dollar here, where it's a great learning experience. Don't get me wrong. You don't necessarily need a trending week right here to in order for us to make profits. You don't necessarily need a trending week in order to have a great learning experience. I would argue these conditions are more important even than simply trending conditions, because trending conditions is quite simple. There's not a lot to talk about in trending conditions. You have a fair value gap, you expect a new fair value gap off of that. It's almost like too simple sometimes, where the difficult part is knowing when to avoid price action. And this is exactly knowing when to avoid price action and being very careful with your trades overall. So right here, this is again, even if it continues lower, then I would want a new fair value gap lower off of that in order for me to be interested again. I do not want to trade that right there, simply based on the premise fair value gaps have not been following through as well. Then what do we see? We see market price closing right there. Now, there's another thing that I want to go over right here that is quite important. And that is going over when we expect candles to move higher or move lower. So when do we actually expect a new expansion phase to be created of a fair value gap? This is something we are going to dive into deeper as well next week, but I already want to touch on it here. And it is mainly seen through candle signs as well. The whole premise why we use candle signs and wicks. Wicks are a sign of respect. Wicks are lower time frame fair value gaps. So on the lower time frame, displacement happened on wicks. So it is very important to understand. I'll get you to your question in a little bit, Hope. And it's very important to understand right here that when we respect something, we are already creating a sharp turn, we are already creating displacement, like we mentioned. So with that in mind, we should expand quite fast. What does that look like? When we have this premium area right there, we come into it first candle. That first candle is a high close, right? Like we talked about, if this was a fair value gap, let's say we ignore that it's a high and it was a fair value gap, and we closed inside the fair value gap. It's the exact same premise. Where right here, when we close inside of it, we can still sweep the previous candle high to then continue lower off of that. After this candle continues lower right there and rejects below the low again, the next candle should be an expansion phase lower if we want to continue lower. If we want to continue higher, and that's where the 50-50 price action comes in, because if we want to continue higher right there, we should have continued higher and we should have not created an expansion phase. So the exact opposite. Where the third candle should simply set create a fair value gap lower right there. Now, when we come into this overlapping part right here, we have the first candle right there, which is also coming into it quite late. It is closing inside of it, but there's a difference between this wick and that wick right there. Relatively seen to the overall candle, this wick is already longer, indicating we already have displacement going higher. Next candle should expand higher, and potentially, if it wants to, create the expansion phase. Then after that, we create a fair value gap going higher. Then once we reach below this low right here, we have first candle coming into it with an extremely long wick. Perfect. If we want to respect the discount array right there, next candle should continue higher. Why? Because we are now respecting this with the long wick right there. Then we have the fair value gap sitting right there. We come into it the first time, and now it gets interesting, right? It is always, we are always expecting, if we are coming into a PD array, the first or the second candle needs to continue higher off of that or continue lower off of that PD array. And when do we expect the first candle or when do we expect the second candle? Well, the first candle will not expand higher if, well, I didn't say that correctly. The first candle will not expand higher if it simply does not want to expand higher. So what does that look like? Again, remember the rule that we went over in the advanced enrollment. When we close inside a PD array right there, it is usually a late close, meaning that during that candle's formation, we come into that PD array quite late, meaning that that could lead to a low close, which does not necessarily mean that we are already disrespecting it. When we are disrespecting that, it means that the second candle right there fails to continue higher and close inside as well. So here we can still sweep again the previous candle low. This is the 4 hour, can be anything, right? Can also be on the 1 hour, on the 50 minute. It's also on your entry pattern on the 1 minute. Afterwards, we expect this candle to continue higher. Does it need to create an expansion phase? Does not necessarily have to. In the next two candles, after the first candle right there, being an expansion phase or just being an up candle and closing above the fair value gap right there, we expect an expansion phase to be created. That is very important. Then afterwards, we have this fair value gap sitting right there as well. When we come into that, we have the first candle already closing above it, nice rejection. Next candle can be a move higher right there. And afterwards, we have the same exact thing. And this is why secant short conditions right here, it's actually quite interesting to study, because the respect of the premium arrays and the discount arrays are quite clear, as in we are not following through on them, but we are constantly respecting both sides of the market, making an overall consolidation, making 50-50. Now, right here, what do we see? First respect is already a long wick right there. Second candle is an expansion away. So this is also what we expect from price action when we are actually trading it. When we look at PD arrays, the first candle, if it already is a rejection, to put it into a step-by-step manner. First candle, if it's already a rejection, we expect second candle should be moving higher or lower, depending on if you're looking at a discount array. Discount array should be an up candle. Again, moving above the discount array and moving further again. If it's a premium array, it should be, of course, a down candle. If the first candle did not reject, then the second candle can still sweep the previous candle high, previous candle low, again, depending on if we're looking at a bearish or bullish scenario. And then it should, afterwards, it should close above a discount array and below a premium array. That is very important. Again, this is a topic that I wanted to introduce to you during the breakdown right here. This is exactly what we're going to touch on more and more in next week. So in the meantime, if you, because I can understand it might be quite a little bit overwhelming here, try to study it this weekend or whenever you have the time, of course, and then we'll go over it more and more next week as well. So let's take a look at the different pairs right here: ES, NASDAQ, YM, and DAX, etc. Looking at ES, let's see what it wanted to do. Well, this is actually very interesting overall. And well, I say interesting, it's actually not that interesting. And what I mean by that is that we never really got any daily fair gap higher. So that also indicates to me that I do not really want to trade that. Ideally, when I want to trade a trend, we should just be creating fair value gaps on any single time frame. When it comes to an entry pattern, it's a little bit different. For example, if I look at a 15-minute ST plus RE and we do not create a 1-hour ST, I don't really mind. It's mainly those higher time frames should just be in alignment with each other, meaning the weekly wants to continue higher, then daily should just create daily fair value gaps higher. So this is just not that interesting to me right here. But again, we can see the same thing where it is really seek and destroy like, because we are not following through on fair value gaps right there. Now, let me go over one question. I am currently moving my mouse. It should be big right now. Can you see it? Let me know. So how long should we wait to say that, okay, seek and destroy conditions are over? We see Zeus said, same rules apply when it breaks out of the range with fair value gap showing displacement. Yes, exactly. So for us to wait, for example, here, for seek and destroy conditions to be over, we first need to determine what actually is the consolidation here. The consolidation here is this overall price action right there. Why this price action? This is where we came into the previous fair value gap right there. We failed to create a new fair value gap higher off of that. This is also the area where we had a premium array in the form of that bearish fair value gap right there, which we also failed to continue lower off of. So this whole area is where we are consolidating. Now, again, does that area need to be exactly picture perfect? You need to be exactly correct to the pip to get that area correct? No. You can just very simply eyeball it as well. And with experience, it's not that difficult to see the consolidation. As in, I think we can all pretty clearly see this is for this week overall where the consolidation has been, because this side has just been expanding as well. After we came into that, we've been consolidating. So what do you want to see? Well, if we want to wait for seek and destroy conditions to be over, we would want to see fair value gaps continuing higher right there, closing above the consolidation highs. Or we would want to see fair value gaps continuing lower, closing below that area right there. And that is where that consolidation area right here then becomes a fair value area. Meaning if we have this, it's the same premise for every time we come above a high, etc. Same premise. Below a low, fair value gap overlapping with the exact lows. So we expect a move like this. Now, if this was a sweep, we do not expect this right here, because then we look to potentially target the highs again, right there. With the same premise, if we close above those highs, we have fair value gap overlapping with the highs, and we expect higher prices off of that, if that makes sense. So ES right here, consolidating price action and a lot of seek and destroy conditions right here, which is very important to understand because it affects the way you overall trade as well. So essentially that area becomes an overlapping gap, and then you ride the trend till it gets a seek and destroy again, rinse and repeat, infinite money glitch. In theory, yes, exactly. yes. Yeah, exactly. And this is why fair value gaps are what I mean with a reliable concept, what we went over in the first session. If you weren't there, fair value gaps are very reliable because they tell you when you should stay out of the market and when you should be able to participate in the market, which is very important. They always have some kind of logic behind them, which is very important. So from ES, let's actually take a look at NASDAQ, because NASDAQ is a little bit more interesting in my opinion. Because NASDAQ reached an all-time high right there, reached a target actually. What can we see on the weekly actually before we dive into the lower time frame? On the weekly, we see a long wick, right? So we already know for next week, this is clearly indicating that we might actually want to trade into the weekly fair value gap right there. So even though this, technically speaking, closed above this second expansion phase candle high, indicating what? That it is indeed a breakaway gap. But the way I would approach this right here is I would not necessarily see this as a breakaway gap, just a normal fair value gap for me. Why? Because we already have a displacement right there going into the breakaway gap, which for me right there is just a normal fair value gap at that moment in time. I see this as just a sort of variation, you could argue. And this is why I mentioned in the sessions, reading that third candle is the most important part, because just a close above the second candle high right there is not enough. It's not enough to understand if it truly is a breakaway gap. It's very important. So right here, once we reach those highs on the lower time frame, what did we then have? On the 1 hour, we saw an ST right there. Didn't really get the nice bullish fair value gaps, but the bearish fair value gaps were very clear right there. And afterwards, we saw lower price action as well, sitting right there. Now, targeting that was quite easy, right? Because on the daily time frame, how did we deliver into that? Daily fair value gap into the all-time high as well. On the 15-minute, this was quite interesting price action as well, because we were coming below these lows right here during equities open before we continued higher right there. And a simple thing you would want to do right here is once we sweep this low, all right, we have a potential sweep. Then what you would want to wait for is a fair value gap higher, which eventually you got right there as well, and got right there as well. Those are all fair value gaps you can look to trade to continue higher. First target being this high, but we were very close to the all-time high right there. Once we reach that all-time high, we do not want to look for any trade opportunity right there at that moment in time. We want to take a small step back. And afterwards, on the 1 hour, we see we have a beautiful ST. On the daily, becomes very interesting right now how we are going to combine the time frames. Becomes very important as well. On the daily, at that moment in time, we saw this, which still indicates to us that we might have an expansion phase, right, of the new daily fair value gap potentially. If we do not create a new daily fair value gap higher, then we should trade back into that level, the first candle high right there. Then on the 4 hour, let's see, on the 4 hour, we could also continue higher before coming into that daily high right there. And same premise, this high sitting right there it becomes interesting. We actually looked at this live on Thursday as well. This right here becomes interesting because if we trade back into that level, there are more signs to actually continue lower right there after sweeping the all-time high to then reach for this daily line right there. And once we reach for that daily line, we also do not create a new daily fair value gap higher, which indicates overall that we do not have any fair value gap higher in this overall leg right there. Which then this leg, just simply said, is not for offering fair value. So it becomes liquidity right there. And once this becomes liquidity, that is in perfect alignment with what we saw on the weekly, because then we are also creating a weekly fair value gap right there. And that liquidity is simply the low of that weekly fair value gap. So it all starts to stack up where it all essentially comes back to fair value gaps. So here, if we go into the 4 hour and we go into the 1 hour actually as well, because that's what we did at that moment. We also saw this did not create a new 1 hour fair value gap higher right there. So no 1 hour fair value gap higher. So the signs essentially start as early as on the 1 minute time frame, right? And then you go into the 5 minute, 15 minute, 1 hour, 4 hour daily. And that all the lack of those the lack of those new fair value gaps being created, they tell us a story. They tell us that we do not want to trade in that direction, most likely. Now, at this moment in time, we also had some interesting price action because on the 15 minute, if we look at this, we still had this order block right there, which again, at first, I would not necessarily expect that to hold. And the reason why is simply said because overall, we did not create any new fair value gaps higher on the more important time frames, which was the time frames above the 15 minute. But what do we see? We also have an ST sitting right there. That bearish fair value gap, the first bearish fair value gap. That first bearish fair value gap is not necessarily where I would want to see a retracement into after closing like this. With the third candle just not being a variation breakaway or not being any variation fair value gap, meaning that this could be somehow a fair value gap to continue lower off of that. No, this for me is a clear breakaway gap. There's only displacement going lower. Very small displacement going higher right there. So if we then continue higher right there, I do not expect this breakaway gap to hold. So then the target would become this high right there. There's all things we went over as well in the live session, just a little bit more detailed potentially. Then right here on the 5 minute, etc. Eventually we continue higher. Once we come into that fair value gap on the 1 minute, we see this is absolutely beautiful because this is what you'll see on the higher time frame as well. And what we were talking about the rejection at the beginning of this breakdown. When we talk about the rejection, this is exactly what I'm talking about. Where here we come into that 15 minute fair value gap right there. We expect a rejection. Whether it will hold, all right, that's what the 1 minute will tell us here. Because if it wants to hold, then what should happen? If this wants to hold, this should have been an expansion phase, and this overall should have been a sharp turn. Where once we trade back into this level right there, that indicates to us that we're not that bearish anymore. So what do? We wait for a new fair value gap right here on the 1 minute time frame. And that fair value gap is exactly where the entry could be because we have already experienced all the rejections right there, which indicates that the run here above this high, this run becomes no resistance in essentially low resistance liquidity run because there is no resistance. There's no premium array right there that is clearly holding price back before we reach those highs right there on the time frames above us. So here, this is a great entry right there. And even the overlapping part, again, that is where then your personal preference also comes in. Now, when you're in the entry, of course, we also talked about micromanaging. That is very important to not be super selective on when you go break even, etc. Because let's say if we followed the same rules right there and we said, all right, but this candle already needed to expand higher, let me close this trade. Well, simply said, you missed out on a winner. So when I'm actually in a trade, I tend to, or I like to forget those rules right there when it's around my entry level, because I do not want to micromanage my trade. That is very important. I want to be picky about trades I take, yes. But when I'm in the trade, I already trust the process that I went through to get me to that trade. And that's a lot of time what people tend to forget. And from my experience, what I also tended to forget is that when we are micromanaging a trade and we all of a sudden want to go break even really quickly, we want to hit our take profit really quickly or move our stop loss really fast, then we essentially forgot the whole reason why we went into that trade in the first place, right? So we ignore all the good signs and we replace them with bad signs all of a sudden. So it's a short-term memory loss almost when we're in a trade. And that is very important to sort of ignore. Ignore that short-term memory loss. Remember the long-term picture that you had. All right, remember where we're coming from, why you take the trade in the first place. That's very important. Now, after this high, it got reached right there. That's where we stopped the live stream. And this is where it became very interesting because we did mention, all right, we can continue lower because we did not create any fair value gaps higher. Then after we saw a move higher right there, which we also said, all right, if still the move higher happens right there, then of course we'll just follow on that. But we want to see, again, this is where we went over it a lot of times right now. So I hope it's already a little bit in your mind right here that what do we want to see ideally right here? We want to see, or we would love to see a fair value gap exactly overlapping with this high, because that clearly indicates that we are indeed bullish. What do we see on this next candle? All right. That tells us a lot, right? So here we fail again to create a new 15 minutes fair value gap after we try to push higher one more time, sweeping those highs again right there. Afterwards, we see all this getting disrespected right here. So on these moves lower, we do not have any fair value gaps going higher. If you find any fair value gaps lower right there on the 5 minutes, 15 minutes, whatever your entry time frame is right there, you have so much to target, because the first target becomes these lows right there, because there's no fair value gap, there's no fair value gap holding you back right there. After you come into this daily right there, there's no fair value gap after that to hold you back anymore. So then the target becomes this low right there. So I think we went over this in another video earlier on in a different enrollment, not sure which one it was. But when all these things start to align, that's when you can have crazy targets as well. So for example, where you want to take 80% off at 1 to 2 and you let it run to 1 to 10, for example. That's when all the things, all the stars start to align. And when you then take a trade, it just starts running like crazy, crazy, crazy. So right here, any fair value gap lower right there is a great entry. Any fair value gap lower, of course, if it's in context, is a great entry right there to continue lower. The first target, now, let's see, we have reached the daily target right there. So that already indicates we have not created a daily fair value gap higher, which indicates to us, perfect. Next target is what? Next target is these lows right there. Just quickly, we also see actually that we are not creating a bearish 4-hour fair value gap. Here it's important to understand that we did not create a daily fair value gap in the first place. So that is a little bit more important to understand, because of course, daily is stronger than the 4-hour. So if the daily does not create a daily fair value gap, then and the 4-hour does not create a daily fair value gap, which one is stronger? The daily failing to create that fair value gap is going to be stronger. It's very important. So we can still look to continue lower overall. 1 hour right there. And eventually we have quite a big retracement, I think, on Friday right there to eventually continue lower off of that. Here, I want to go over this retracement before we move on. This bigger retracement that you're seeing right there. Exactly, domino effect. Exactly. Couldn't have said it better. Exactly. And the thing here is it's very important right there that how do we approach this situation? We did not look at Friday live. We looked at Thursday live right there. And what we want to look at right there is, because we have a big retracement, it's a little bit more difficult to trade, because of course, when you have just a simple retracement into a fair value gap like this, it's quite easy to trade, right? Because you go into the lower time frame and you continue lower off of that. Then afterwards, on the 15-minute, etc., we can look for fair value gaps and 1 minute for our entry pattern to continue lower. Now, on the 4-hour right here, this was also quite a heavy retracement, because we did not simply come into a 4-hour value gap to continue lower off of that. So how do you actually approach this at this time? Well, at equities open, it is very important right here to mark out every single candle that could potentially create a fair value gap higher or lower. So what does that look like? Let's see this about that time. Let me see. Actually this right here. This is equities open right there. So at this instance, we do not care. We might continue lower, we might continue higher, right? Our overall higher time frame understanding was that we want to continue lower. All right, perfect. Well, if that is the case, then we should get signs that we want to continue lower. If we get bullish signs, then again, we still wait. So here, the first bullish sign is that we have an expansion phase of a fair value gap higher, actually. So in order for us to avoid creating that bullish fair value gap, we should now come back into or trade back into that first candle high right there, which we see on the next candle. This right here is a trigger, and once we continue lower after that as well, is a trigger to go into the 15-minute and into the 5-minute to look for fair value gaps lower. Well, this might have been a loss right there. I'll give you that one. That might have been a loss right there. And afterwards, we sweep those highs. And that right there, still the same trigger, finding fair value gaps to continue lower from. Those are a few fair value gaps. Eventually, do we form some 15-minute fair value gaps as well, right there, to continue lower off of that. And on the 1 hour, we have this fair value gap right there as well. So on the 1 hour, this right now is a fair value gap we want to continue lower from. And that is, of course, on the 1 minute. That is just your simple ST plus RE as well, going lower right there. Which is quite nice price action overall if we understand what we're doing. And we can understand what we're doing through those fair value gaps. So if eventually the target becomes this low, of course, just any discount rate that is sitting right there, and eventually this low heading into next week as well. That's quite important. On Thursday, yes, we had a live session right there, basically explaining the price action right there, calling it, yeah, sort of calling it for sure. We expected lower prices at least right there. Yes, we expected this lower prices to happen right there. And we also saw that entry right there. So yeah, we basically called it live, you could argue. Then afterwards, we move on to YM. On YM right here, it is, this is where it's also quite important, but it's a whole different scenario. And for Vegap, there's so much different scenarios that we could talk about this for ages, but I mainly wanted to go over the indices because Forex was just really reliant on the dollar. So if it's consolidating, it's just simply consolidating. Then here on YM, we have these Vegap going higher right there. On the daily time frame, we also have this daily Vegap going higher right there. We see that what we talked about in the beginning of this session, of this breakdown, we have a first candle. Now that first candle is already a rejection. So I would want to see that next candle continuing higher right there. Very simply said, the next candle right there should continue higher, which it doesn't do. So when it doesn't do that, then I simply want to take a step back as well. And when I take a step back, when in doubt, you just wait for new fair value gaps. So right here, it's very simply said as well. You just wait for new fair value gaps. And this is also typical price action you'll see after sweeping an all-time high. Even price itself is quite unsure on what it wants to do next. And afterwards, through new fair value gaps, we can tell the same story. Where here we could potentially continue higher a little bit. But we do have, again, those sweeps right there happening. Right there, which is quite important to understand. All right, on DAX. DAX as well continued higher again. We see a beautiful overlapping gap right there. Why is that an overlapping gap? Because we have this breaker sitting right there to the left. So that becomes quite interesting as well. And eventually we create a new daily fair value gap. Even though we do not trade back into daily fair value gap, I still want to see daily fair value gaps being created. That is quite important to me. And then after we have 4-hour fair value gaps as well. This is a bit of a shame right there that we do not create that 4-hour fair value gap higher right there. We do respect that area nicely. Now, I want to as well go over the breakdown list on why I would want to trade it or why I would not want to trade it right here. Australian dollar JPY. Well, this is very easily summed up right now because if we understand seek and short conditions, then we also understand Australian dollar JPY right here. Exactly what we went over on the US dollar is happening on Australian dollar JPY as well. We have fair value gaps, we do not follow through on fair value gaps. So the early signs on what happened is sitting right there. We sweep the previous day low, which this is normal price action behavior, right? Normal price action behavior right there. After we create a 4-hour fair value gap higher right there, which we would want to see higher price of that, of course. We sweep again this low. All right, yes, that is very suspicious. That is not something I would want to get involved in. So even if we create bearish fair value gaps, it's also not necessarily something I would want to get involved in. So I would simply want to stay out right here. That is very important. Then on Australian dollar, New Zealand dollar, let's see. Australian dollar, New Zealand dollar, we had a daily fair value gap continuing higher right there, which initially was a breakaway gap for me as well. And on the 4-hour right there, I would want to see this 4-hour fair value gap, which we actually saw beautiful, continue higher right there towards this high right there. Afterwards, because again, the question becomes first the draw on liquidity or the fair value gap right there. Well, first the draw on liquidity, and then we can come into the fair value gap right there. The opposite of an actual classic fair value gap where you would want to see fair value gap to then draw on liquidity. So once we do come into that, we can of course look to continue higher, but we already reached the target. So I was not super interested in this anymore. And also don't like this consolidation, very simply said. Then Euro, New Zealand dollar. Let's look at this. Euro, New Zealand dollar right here. This was quite interesting. And the reason this was quite interesting, and again, when I say it is quite interesting, I do not mean the whole week is interesting. There's only one small part here that is quite interesting. And there's only one part to me that is one part here that to me is really high probability. Because we come into this weekly order block, weekly breaker right there, that we can continue lower from. Or at least we can expect a rejection from. That is important. So here on the daily time frame, if we would want to continue higher, then of course we would want to see daily fair value gaps being created. So when that doesn't happen right there, the same premise becomes, if we are not going higher, then what are we likely doing? We are likely continuing lower unless we're consolidating. So the target becomes this low right there, that swing low inside that daily fair value gap right there. Because this daily fair value gap failed to continue higher, failed to create a new daily fair value gap higher off of that, then the daily fair value gap is not the target. No. The swing low inside the daily fair value gap becomes the target right there. Even if that was a previous day low, something like that, then that becomes the target. So here on the 4 hour, it becomes usual context, where you have unusual context to now usual context. So that right there is the only 4 hour fair value gap we have. Perfect. We can continue lower off of that. And I was a little bit sad, to be honest, that I missed this trade because it's an absolute textbook beautiful trade. And on the 15 minutes and even on the 5 minutes right there, we just saw a beautiful ST plus re going lower as well. ST, re right there, continuing lower. Absolutely beautiful right here. Beautiful trade to continue lower. Did not catch it. Bit of a shame. And then afterwards, once we reach this low, it is also important to understand that for me, this is something I would delete off the list. This is not something, because it just played out once right there, I'm interested in again. No, again, that high probability conditions happens in a very specific area right there, very specific area, where right there, I want to wait again for another specific area, which might not be on Euro New Zealand dollar. It just happened to be right there on Euro New Zealand dollar. Where even if you were to trade the 4 hour value gaps low right there, then there's a lot wrong with that. Let's put it that way. Because here we have this sweep of that low right there, and we have reached the target. So there's two things. Then afterwards, we also have an aggressive move coming into the fair value gap because we are respecting a discount array right there and not closing below it with overlapping fair value gaps. That is very important. So this is not something I would expect lower prices from. Or at least, yes, we can expect lower prices. But again, we want to see lower prices with a perfect entry pattern, with us getting involved, without us getting our stop loss hit. So we do not want to expect lower prices where our stop loss gets hit 3 times before we get the right move. There's a difference between that, because both play out. It's just we do not want to take those 3 unnecessary losses before we take one winner. That's very important. Let me see. What is ideal, for example, if we have a weekly bullish fair value gap context and third candle have sweep of expansion candle? This will be bullish, right? Same scenario in GBP, New Zealand dollar. Could you review it? For sure. As remember we were at Canadian dollar JPY right there. GBP, New Zealand dollar. Is it on the list? It's on the list. We'll approach it in a little while. Let's see. Canadian dollar JPY right here. So this is also quite interesting because we came into that daily fair value gap right there. And that daily value gap can continue higher. Now, after a candle like this, the only thing going through my mind is I want to see higher prices off of this 4 hour value gap right there. Because we've already been expanding higher right there. There's no reason for price to come back below, all the way below that low, which it did. It did come back all the way below that low right there. So again, this is not something I am interested in then afterwards. And we can already tell again, by the way, we approach that 4 hour value gap as well. This close, very low close right there, which is seen through on the 15 minute, etc. Never really getting a right entry pattern. Never getting an entry pattern right there. That indicates then a 4 hour low close, which could also indicate that we are creating a 4 hour ST continuing lower, which is not something I would want to look at. Then on Australian dollar, Canadian dollar, let's see. This is quite easy summed up, to be honest. Right there we have this. This is, let me actually see, what is this low? Is that overlapping with something? No, so it becomes this low right there. That is actually overlapping with the fair value gap right there. So this fair value gap with those lows, which we can continue lower from as well. Not the beautiful, not beautiful price action on the daily time frame. On the 4-hour, eventually we have this ST, which on Tuesday failed already, which again is just not something I would want to see. When this fails to follow through, the only thing that I can think of that would still be able to sort of repair that would be news. As in, if news didn't have or news was not supporting the idea of creating that ST, then I would still expect lower prices right here. But other than that, price-wise, don't like this at all because we are not respecting fair value gaps, which is very important. Euro Australian dollar right here. Simply said a consolidation. So there's nothing really much to go over right here. That consolidation is again seen through fair value gaps, not respecting fair value gaps on both sides of the market. That is consolidation. So Euro JPY, exact same thing right here, where we just continued lower a little bit. No clear fair value gaps. So also not something we would, or I would want to trade right here. GBP New Zealand dollar. So let's see. Let me read the question again. Let me see right there. What is ideal, for example, if we have weekly bullish fair value gap context and a third candle have sweep of expansion candle, this will be bullish, right? Same scenario in GBP New Zealand dollar. Could you review it? Yeah, so if we, and if I get your question correctly, if we now come into this fair value gap right there, into that weekly fair value gap, and we sweep, or well, when we come into the fair value gap itself, we already sweep the expansion phase candle most likely, and then we continue higher off of that. Yes, that would be ideal, and that would indicate that we are indeed bullish. So ideally, here on the weekly, this could be very interesting actually, going back into the weekly value gap to then continue higher. But we are close to drawn liquidity right there. So going over GBP New Zealand dollar, that's also what I wanted to take into account, because we were already close to the drawn liquidity. We didn't come into the daily value gap right there. We already continued higher. On the 4-hour or daily, actually, we did not create any daily value gap higher. 4-hour, we did not respect 4-hour value gaps right there, which to me could be an indication that we either get very ugly price action right there to continue higher towards the weekly high, or we come back into the weekly value gap to continue higher off of that. Let me know if that makes sense right there. Let me know if I understood the question correctly. 4-hour value gap may push higher since we're exactly that. Perfect. US dollar, Canadian dollar. Let me see what you said, Dom, by the way. Or I would love the weekly DAX trade analysis from you with Flow. If you're not already on it, wasn't sure on a few trades if I was right. I'll get to you to the question section, actually. To the individual question section. I'll do it over there as well. Because DAXes as well do not necessarily want to only look at it from a fair value perspective, where in a real breakdown, I want to look at order blocks, everything involved. So I'll get to you as well. For sure. I'll do it probably later today, studying the DAX for Flow right there. All right, US dollar, Canadian dollar right here. Let's look at this. So on the weekly, we are currently respecting that order block, which we can see though that we are also respecting this fair value gap, but we're also creating a bullish fair value gap continuing higher right there for US dollar, Canadian dollar. So on the daily time frame, the only thing that we really have is that we need to wait for a rejection right there. This is again the same. Which one was that? Was Nasdaq. Nasdaq on the 1 minute time frame of the 15-minute fair value gap right there, which we went over on the Thursday session, where we get the rejection, and that rejection is very simply said what you want to wait out. You want to wait that rejection to see what actually wants to happen. Here you want to wait for a daily fair value gap higher or daily fair value gap lower, where eventually we see we are potentially creating a daily fair value gap higher right there, and we get this we trade back into that first candle right there, and that of course is a great indication that we want to continue lower instead of continuing higher. So again, it's the same premise where this might be a great order block or break block or whatever it may be for some people, or for people that are not aware of what is happening on a daily time frame right there. But for me, that would be an indication that we actually want to continue lower. So the first 4-hour value gap is a great trade, don't get me wrong, it's a great trade right there to continue higher. But afterwards, it's just not that great anymore, because we simply said do not want to hold based on that daily fair value gap not being created. US dollar, JPY, let's see. This was initially, beginning of the week, quite interesting right here. We had a beautiful rejection of the daily fair value gap to continue higher off of that. Afterwards, we sweep and we sweep and we sweep, and we do not respect any fair value gaps, and we do not continue higher, do not continue lower. This is overall as well consolidating right here. So beginning of the week was quite promising. At the end of the week, wasn't that interesting anymore. Euro US dollar is exactly what we went over on the dollar, just inversed right here, where we also had the lows sitting right there, the overlapping part that we came into eventually, and that we continued lower from. And this is quite important to understand though, when we sweep these lows right here, because it's the same premise that we went over on the dollar. That is respecting a discount rate. So when we are coming into this fair value gap right there, first of all, it's not perfectly overlapping with the lows that we just took right there. Second of all, it's respecting that discount array right there, which means that we don't have a lot of bearish momentum because it's not consolidating. We have bullish momentum actually. So we do not want to stop that momentum and take a loss right there on that 4-hour fair value gap to continue lower. So here eventually we sweep that high again to continue lower off that. Sorry, I selected the wrong overlapping part actually. This was the overlapping part we were looking at. My bad. Right there. To continue lower off that. And then this was the high we swept again. And then eventually we got a new sharp turn. And then right here we confirmed order flow again, going lower, where this right here was where we came into the 4-hour fair value gap to make the last push towards these lows again right there. And eventually we see the same thing. We sweep it to then not respect anything. So if there are any questions, then please feel free to let me know. I'm going to end the fair value gap breakdown right here. I'll do a different breakdown again as well, just looking at everything, looking at order flow and whatever you can think of, breakers, order blocks, a little bit more as well, instead of just fair value gaps and reading the fair value gaps. All right,